view of the business. And for me, when I try to get a feel for any new business, the one of the great documents that really is available to just about just all investors is something called the 10K, which is essentially the SEC report, the annual report for the company. So let me kind of show you how to get that, and then we'll dive into it a little bit. Google Chrome. All right. So here's what we do. I always just do, Square Investor Relations here on the Google page. Dr. Google, and the Square Investor Relations comes up. So you kind of poke on that. There's a bunch of stuff. You can, see, here's the latest quarter and the 10Q. But what I actually want is the annual report. So I'm going to poke around a little bit here. Financials, annual results, or SEC filings. Let me just show you how to get it to the SEC filings here. So it shows you, most of the time, this is how things appear. And you can look at, you can drop the form type down here and select annual filings, and boom, there it is, the annual report, 10K. And you can see you can get it in a Word doc, an Excel, an HTML. I always love the PDF, and I've downloaded already, so I'm not going to take you through that. But the PDF allows you to search, and you can search on keywords. And so that makes it super helpful if you're looking for things like, one of the things that often gets hidden for me is how much of the business is international. So I'm going to go right in here. But the piece that I want to sort of start with today, we talked about, let's dive into the business of Square and what Square is all about. So usually right in the beginning of the 10K is a table of contents, and you can see it's all blue and underlined, which is really nice because this document is 147 pages, and you can click to the area that you want, and usually the business section is usually right up front. So that's where we're going to go. Just a reminder, pop on over to Slido, sli.do on your web browser, and put in MF Live. We'd be happy to take questions. We'll be happy to talk the whole 45 minutes if you want. So either way, we'll watch for the questions to pop up, and if there's something, we'll kind of tailor our discussion for your questions. So not surprisingly, Square has, you can kind of see, we started the business in 2009 to enable businesses, sellers, to accept credit card payments. And it says this important capability was previously inaccessible to many businesses. And I actually, my brother-in-law this was something that he experienced. He described what the process was before Square. He would often, he's a board game designer, and would often go to these shows and sell his board games. And somebody would come up and say, hey, I want to buy a board game. And of course he wants to sell his games. So he'd take their credit card. He had those little machines that, that run the imprint of the card on sort of this 3-part form, which he had to buy and pay for. And then, people would fill out their information. They usually put a phone number or something on there. And then he said that he would wait till he got home and put in all these payments. And sometimes the imprint didn't come through, or, for any given show on the weekend, he'd have a payment that didn't process. And so he gave out a game and didn't get the money. So to have, Square started out with a little Square device that plugged into the headphone jack of the mobile device. And so you swiped it through, and it immediately provided the seller with a credit card payment, and the seller knew that the payment was going through. And my brother-in-law described this as a kind of a life-changing, technology for him in really making something that was kind of a big hassle to something that was not only timely, simple, but effective in that he got his payment. So Square has grown up considerably since then. And so you can see this is sort of the next thing. They realized that sellers needed a variety of solutions to thrive. And then they built on this seller ecosystem. So let me just dive down here. Now, Square's seller ecosystem helps our sellers sell, run, and grow their business. And somewhere in here, and it just sort of, I love this. Okay. We combine hardware, software, and financial services to create products and services that are cohesive, fast, self-serve, and elegant. So similar to, the technology description I described of taking the payments, the seller ecosystem is built on that. And so you can think that they've just added stuff over time. And you can kind of see here, this seller platform on the left, team management, developer platform, business banking, customer relationship management. There's a number of different services over here. And in the year ending December 31st, they processed 104 billion of seller gross payment volume, and more than 2 billion card payments, and 400 million payment cards. And Square's ecosystem had 210 million buyer profiles, and approximately 295 million items were listed on Square by sellers. So they have built this business significantly, but they also have the Cash App business, and it provides an ecosystem of financial products and services to help them manage their money. Let's go down a little bit. They talk a little bit about response to COVID and how that affected them, because this is the year-end 2020 report. They talk about the customers. Our sellers represent a diverse range of industries, sizes ranging from sole proprietors to multi-location businesses. And I like this stat here. We are increasingly serving larger sellers, which we define sellers as more than 125,000 in annual GPV, gross payment volume. So if you think about it, I had always thought Square was sort of the small business seller, but 125,000 in annual sales, that's a pretty decent sized business. So more and more they're serving those larger sellers. And it says GPV from larger sellers represented 60% in the fourth quarter of 2020, up from 56 the previous. And also they had no customer that accounted for greater than 5% of our total volume. So pretty nice diverse set of businesses, and large and growing. You can see the GPV by industry. It's split out over a number of different industries. And here's the mix by seller size. This top one at about 30% is greater than 500K. And then this was just the 60% was the greater than 125K, and 40% is a smaller size. So you can see over time, over the last, this is 2014, 2015, 1, 2, 3, 4, 6, 7 years, they've gradually decreased their dependence on the small seller, which is hopefully some of these small sellers have grown up to become bigger sellers. And the last piece I wanted to hit before I wanted to hand it over to Matt is the seller ecosystem consists of 30 distinct software, hardware, and financial services products. So we'll list some of we'll list some of them here: Square Point of Sale, Appointments, Retail, Square for Restaurants. So these are their sort of software products. You also have Square Online that helps build websites and online stores. online checkout, invoices, virtual terminal. They also have things for managing small businesses. So this is a scheduling software. They have contracts, loyalty cards, this dashboard that allows sellers to sort of see their whole business, payments, commerce, certainly a point of sale reader, contactless chips reader. So, these 30 are pretty broad in what they do. They help with managed payments, risk management, instant transfer, Square Card, Square Capital. And then the Cash App, on the Cash App side, you can store, send, and receive funds. You can use it for spending. You can use it for investing. They also, in 2020, acquired Credit Karma Tax. So they have some tax preparation stuff. So if you just think of Square as a payments platform, I think you're selling it short. And so that gives you a little view of the business. And you can see, there was even more that we didn't go through. And I would encourage you to kind of read through that. It's a great sort of, business 101 of the company.
I'm going to bring the financial statements on a screen in a second, but I had a few things to add while you're actually just looking at us. Kind of break up the screenshots of financial stuff. I feel like people's eyes glaze over after a few minutes of that. You mentioned there at Square's humble beginnings, how the card reader was so transformative in the beginning. Mm-hmm. I interviewed co-founder Jim McKelvey, who actually carved the original card reader out of plastic.
Very cool.
He was an artist. The whole business was founded because he was a glass artist and couldn't take credit card payments at his business. He ended up winning a Museum of Modern Art award, a MoMA award, for that original thing. And he finds it so ironic that he spent his career making these beautiful glass sculptures and wins an art award for this little square piece of plastic. Yeah. So fun fact about Square. Other thing, I somewhat take issue of they're calling a business with 125,000 in payment volume a large seller. A long time ago, I used to run a restaurant. It was a wings restaurant. Pretty busy, not too crazy. Our sales volume was about 1.5 million a year, and that was one restaurant location. That was not a crazy busy place. Busy restaurant locations do $5 million of sales a year, like busy downtown restaurants. So just to kind of put that in perspective, that it doesn't take that much to get into that threshold. Yes, it's definitely better than having a mix that's entirely made of like craft market vendors and stuff like that, right, which is what I would think of as the small merchants. But I think the medium range needs to kind of be expanded a little bit. The online seller you mentioned is really a new part of the business. That came from their Weebly acquisition when they acquired the website platform. And they're still in the real early stages of that. I wish they would break out how much of their payment volume came from like in stores and how much came from like online sources and omni-channel. I think that'd be really interesting.
Yeah, they do. They had, through the coronavirus, they talked about it had to kind of go through the earnings call transcript, and the CFO would talk about what did she say? Cardless payments, or what did they say? Oh, card not present. That's what they called it. Card not present payments, where somebody did it over the phone or it was a website, and they were considerable. It got up to like 40 or 50% of their payments during the coronavirus. So certainly Square is not just an in-person platform anymore.
I would think with like PayPal, card not present payments would be like 95%. Yeah. So, and I want to see what Square's numbers look like in normal times. Obviously, when everything's shut down, that number is going to be high. Yes. But so that's a part I'm watching. So I'm going to go ahead and share my screen now that we had a little intermission between financial statements. Let's see. Can you guys see this okay? You see that?
Can you make it a little wider?
How about now?
Ooh, almost got it. One more click and I think you're good.
How about now?
Awesome. There we go.
All right. So every financial report has three different financial statements. You have the balance sheet, the income statement, and the cash flow statement. For newer investors especially, I always consider the first two, the balance sheet and the income statement, to be the most telling in terms of really trying to get a feel for the business. You can look through the cash flow statement, but I'm going to spend most of my time on the first two. So on the balance sheet, the first thing to look at right here, and I think you can see my mouse on when I'm sharing my screen here, is the cash that a company has. It's really important, especially for high growth companies that aren't consistently profitable. Like Square was profitable last quarter, but I wouldn't call them a consistently profitable business at this point. They're definitely prioritizing growth over profits. So you want to make sure a business has a ton of cash relative to their capital spending needs. Square has about $4.6 billion of cash, which is pretty impressive. They have a bunch of other different sources of current assets, but a lot of them aren't really theirs. If you look 4 lines down, customer funds, for example, the second biggest source, that's money, say, like customers have deposited into their Cash App and stuff like that. So the cash number, not assets, but the cash and cash equivalents is really what they have available to invest, make acquisitions, you spend on marketing, things like that. Going down to the next section. So your balance sheet is split into 2 sections. You have assets on the top and liabilities right here. And then at the bottom, you have stockholders' equity, which theirs is in the same section. The key number to pay attention to in liabilities, a lot of the first few lines are kind of temporary things. Customers payable, that's money that they have on their balance sheet but is going to somebody else, one of their customers, as a payout. Settlements payable, accrued expenses, things like that. PPP facility advances, that's obviously a temporary thing that's on their balance sheet. So those are current liabilities. Current liabilities are generally defined as anything that's going to be due within a year. Same with current assets, as anything that they could easily liquidate or that will become liquid within a year. Long-term debt is the real telling number in this section. But with Square's, I would put a big asterisk on it. It looks at first glance, Square has $4.6 billion of cash and a little over $4.8 billion of debt. Most of that debt is at very, very little interest. You'll see on the next page what they're paying in interest, and it's almost nothing. And that's because pretty much all of Square's debt is in the form of convertible bonds, meaning that they sell bonds to people that pay very little interest, but with the promise of being able to convert those into common stock if the price goes up to a certain amount. Just to name one example, in November, they did a $1 billion convertible debt offering that pays 0.25% per year. So they're pretty much getting that money for free. And it'll be convertible to stock at a share price that's around $299. So worst case scenario, shareholders will eventually get diluted a little bit. But for that to happen, your stock price has to go up significantly. So it's kind of a win-win for everybody. And in the meantime, they get this almost free capital to be able to grow with. So that's the kind of key points to notice on the balance sheet. Now, the income statement I want to spend a bunch of time on because that's a really important one. They call it their consolidated statements of operations. This is their income statement. Look at this far left column. That's what we're going to be paying attention to. This is the most recent quarter. The 3 months ended June 30th, 2021. So this is the second quarter. This is how Square's revenue is broken down. Transaction-based revenue, a little over $1.2 billion. Subscription and services-based revenue, about $685 million. Hardware revenue, a lot of people are surprised to see this. Hardware is just a drop in the bucket. Less than $44 million of Square's revenue comes from selling the actual payment terminals and things like that you see in stores. And their biggest revenue source by far, more than half of their revenue, is Bitcoin right now. And that's to be expected. Bitcoin is, this revenue counts their entire Bitcoin volume. So this means that about $2.7 billion worth of Bitcoin was bought by Cash App customers. That's not money in Square's pocket. So when you see them report a lot of numbers in their earnings release, and when I talk about a lot of these numbers over this on this page, I'm going to say them twice, once including Bitcoin and once without Bitcoin, because it kind of distorts some of the numbers. So Bitcoin is 58% of Square's revenue, but if you break down the other 3 categories without Bitcoin, transaction-based revenue, this is like swipe fees from their payment volume, things like that. So any transaction-based revenue makes up 52% of the non-Bitcoin total. Subscription and services-based revenue makes up 29% of the total, and hardware is just under 2% of their non-Bitcoin total revenue. So hardware is not only a very small part of the business, but when you go down to the next section where it says cost of revenue, you'll see that the hardware is actually an unprofitable revenue source. They made about $44 million in hardware revenue. It cost them over $61 million to make that hardware. And the reason is it's because that hardware is what generates the $1.2 billion worth of transaction-based revenue. So they're more than willing to take a hit on that. Just a couple of other things I wanted to point out here
before you leave that. I think of the and I know, talking to my brother-in-law, he doesn't pay any subscription fees to Square on for any of the services that he gets or for any of the reports and whatnot. So he explained to me that he just pays the percentage fee for the transactions, and then there's a whole bunch that comes with that. He gets all sorts of reports, and he gets certainly customer service and things like that. So I always think of, and I was just hoping you could tell me I was thinking about this the right way, is the transaction-based revenue is sort of something that everybody pays. And then for those customers that are larger and want more services, maybe like employee scheduling and things like that, that would be this subscription line. So I would think of being high-end subscription services, or the plus plan or whatever, the premier plan.
Yeah, add-on services, I guess, is what you could call the subscription-based revenue. That's a really good point. Transaction-based revenue is when for example, Square makes, I think, 10 or 12 cents off every swipe transaction on through its seller ecosystem. So that would be an example of transaction-based revenue. Square Capital generates a lot of their services-based revenue, is a good example of that. So two more things I wanted to point out. If you look at gross profit down here, Square's gross margin is 24% based on this gross profit number and this revenue number. That's not great for a tech company. But when you back out Bitcoin from the equation, Square's gross profit jumps from 24% to 63%. Bitcoin is not a high profit business for it. That's not why Jack Dorsey has Bitcoin included on the Cash App. It's not because it's a high margin business. Square might make 1 or 2% from a Bitcoin transaction, if that. Operating margin, which is bottom line, this is where the earnings and profitability comes from. 2 points based on this operating income, 2.7% based on the total revenue. But if you just look at non-Bitcoin stuff, it's about 20%. Big difference there. Mm-hmm. So that's the key points that new investors should know about the income statement. If you want to see earnings per share, it's on the bottom. Like I said, not consistently a profitable company. A 45-cent earnings per share for a company that's trading at $270 a share is not a gigantic profit margin, especially when you see that in previous periods it hasn't really been very profitable. So those are kind of the key points. Brian, anything else to add with those?
No, I think you did a great job covering it. And those are the sort of the key things that, just about any investor can sort of look through and start to ask questions. The other piece that I'll just mention is that Matt was going over the latest quarterly report, which is the 10Q. And just below these financials, they take like each section and talk a little bit about each section, revenue, cost of revenue, their different, expenses, G&A, R&D dollars. And they talk about sort of the puts and takes of those things. And that gives you a little bit more flavor of what's going on with the business. So we got two more things I wanted to cover. We have a couple questions, and then I think we can save them to the end. I wanted to cover sort of the growth initiatives and how Square is looking at growing. And usually that's listed in the 10K. And for whatever reason, they didn't talk about that. And I guess, you're not really required to talk about that in your 10K. So what I'm going to pull up is a document of what Square had what they call an investor day, where they come and they talk about, here are our growth plans. Here's what here's our business makeup. Here's how we're thinking about the business. And they often invite the key analysts that cover the company, and they get to ask questions. So sometimes companies do this once a year. Sometimes they do it every other year. Companies like Apple and Google and Microsoft are way beyond doing these things. Amazon, those kinds of things wouldn't do these because they really don't need to. So let me take you and show you some of the slides of the from the investor presentation. So not surprisingly, they talk about the two significant. This is right. Their first slide that they open with is, hey, we got two significant ecosystems, which we kind of talked about earlier. And you can see how the seller piece of this is the blue. This is 2015 through 2019. This was their original business, right? And how it's grown. And you can see how quickly the Cash App has become a large part of the business. And I wish I had 2020 on here because it was even bigger through 2020 because the Cash App took off in 2020, whereas the seller ecosystem with all the small businesses they have didn't grow as fast. It did grow, but it didn't grow as fast. And you can see, like Matt was talking about, a lot of these numbers are just showing you the gross profit. So it eliminates sort of that Bitcoin, the numbers of Bitcoin. It gives you a good feel about how these businesses are contributing to fund the overall company operations. So I really like how they get to the punchline in slide 5 right away. So they talk about these two ecosystems, and they say the seller ecosystem is $100 billion market opportunity, and the Cash App for these individuals here has a $60 billion market opportunity. And they're down here, the single digit penetration of these opportunities. So they talk a little bit about where they are with these and how they're gonna grow. So when they look at the seller ecosystem, they say, well, there's about 20 million businesses in the U.S. that have $6 trillion in gross receipts. So And anytime you look at a total addressable market, this is kind of what you get, right? This is if every single business in the U.S. used Square for everything, this is the market opportunity, right? So the company will never ever get here, and and if they get to 10 or 15%, that would be fantastic. So they break it down into, I really like how they split this out. And you saw some of when Matt was going through transactions and subscription fees, you can see how they have this focus. So they have this kind of dialed in as they know sort of where they're going and what kind of opportunity they have in the US. And so it was funny, Matt, when I was looking through these slides, I expected a little bit more insightfulness into how they were growing, but really this is it. They say, the $100 billion market opportunity, 85 billion in the US. It's really split out between 16 billion in transaction profits from the current international markets that they're in. And oh, by the way, there's this box called new products and use cases. That's it. That's their growth strategy. So it's a bit about, and then this is the medium term, right? And long term, I think I could have put this slide together. New markets and expand further upmarket. So Matt talked a little bit about his $1.5 million wing business. So certainly, if you're running a restaurant that's cashing in 1.5 million in receipts per year, you're probably gonna rely on some kind of technology to take payments, manage schedules, do hiring and firing. You want to pay your employees not in cash, those kinds of things. So that's a great business that Matt brought up, is a great target example of somebody you would want in the Square ecosystem. So here was a little bit of the seller size. So you can see on the left-hand side, this is the different sizes of sellers given the payment volume over the year. And they have the US sellers split out. So they know sort of how many are in each market. And then this is where they came up with that $6 trillion market number. So they are trying to move up market is basically what this slide says. And then they switch over to Cash App. So that was sort of the seller ecosystem. The Cash App, pretty simple, 9 trillion in addressable market in the US alone. So, there's 4 trillion in spending. 4 trillion in sending. So think about moving money around. 2 trillion in spending and 3 trillion in investing. Pretty simple. So they see now it breaks down into what's the profit opportunity in these three buckets for them, and they think it's about 60 billion, and that's just in the US. That's not even before you go internationally for the countries that Square is in. And here's the brilliant slide. New products and use cases, medium term, long term, new markets. So that's kind of their growth strategy right there.
They're really not telling you a lot.
No, I thought when I went over this deck the first time that it was a little bit more, there was a little more meat to it, but I think it was totally purposeful the way they did it, and it sort of lays up into our next discussion. These guys spent a pretty penny on a recent acquisition.
Yeah, that whole presentation. You ever see a company do a bond issuance and they say they're going to use it for general corporate purposes?
Oh, there you go.
Yeah, it's kind of like that's the feeling I just got reading that. Exactly. So yeah, Square is spending $29 billion when they're not spending a dime. Actually, it's an all stock acquisition, so they're just issuing new stock to pay for it. But they're acquiring a buy now pay later platform called Afterpay, and I think I already adjusted the size to Brian's liking on this one.
Ooh, there you go.
All right. So a couple of points I wanted to hit on the Afterpay acquisition. I've said before on other shows that I'm a fan of the acquisition. I'm not a fan of the price they're paying. I think they're paying a lot. So let's dig into what Afterpay is and why Square might be so interested in it. So a buy now, pay later service is essentially if you ever go to checkout on PayPal or on Amazon or any of these companies and they say, spread this over 6 interest-free payments, that's a buy now, pay later service. That's essentially what Afterpay does. So if you look at this chart here, this is Afterpay's growth in customers, both consumers and merchants. And I really think the merchants are the big thing to notice here. Square has a couple of years ago, Square had about 2 million merchants in its ecosystem. So Square's merchant count is in the millions. Afterpay's is 98,000. But this is kind of what I was saying earlier, where I take issue with Square calling a business selling over 125,000 a year as a big client. Afterpay's merchants skew to huge merchants. This 98,000 figure includes companies like Amazon, like CVS, like Dell, not typical Square merchants. Nike, Target, Walgreens. These are companies that are using Afterpay's service to allow their customers to pay later for products they're buying now. That's why you're seeing such a big difference between those merchant and consumers numbers, because their merchants have a lot of customers. And this doesn't even really scratch the surface of the big merchants like Amazon or anything like that. About 16 million customers which from Square's point of view, they could bring those into the Cash App ecosystem, which is exactly what they're planning to do. The Cash App has 40 million active users in the ecosystem. So this is a pretty big bump if they can, even get half of them to use other Cash App services. So that's one point I wanted to mention. The other, sorry if this looks weird when I'm scrolling. Afterpay is growing fast. Buy now, pay later is a red hot subsector of the financial space. We saw Affirm go public last year. That's a big one. Affirm's big client is Peloton. That's where they got. Everyone's financing these $3,000 bikes over 36 months, interest free or whatever it is. That's Affirm. PayPal has built out their own buy now, pay later service. So I guess Square kind of figured they need to catch up, and they're late to the party here. So this also helps Square get into online retail, because most of these buy now, pay later purchases, not all, but most are made through card not present transactions, either on a mobile app, on a retailer's website, something like that. They've grown tremendously. They've more than quadrupled their merchandise volume over the past 2 fiscal years. And this adds an instant $700 million of revenue to Square's ecosystem, which, as we saw on the previous slide, is not nothing. That's Square's revenue without Bitcoin is just over $2 billion. So adding $700 million of revenue is not just a drop in the bucket, especially since this is kind of high margin revenue. Going through this, here's how Afterpay breaks down by region. They are based in Australia, which is why that Australia and New Zealand, the green color you see in the bars, is so big. Brian mentioned domestic versus international growth plans at Square. Square is mostly a domestic business. They're in a few other markets around the world. I believe Australia is one of them, Brian.
Yes.
But they are mostly a domestic business at this point. Afterpay is not. The biggest source of their revenue is North America, which might be surprising, being that it's an Australian-based company. But it's not the bulk of it. Australia is almost as big as North America right there when you look at the revenue makeup here. So of those 16 million consumers that use Afterpay, you'd have to assume about half of them are outside of North America. So this really gives Square's international expansion opportunity a big shot in the arm. So I'm excited to see that. I think that's a big part of what Square is thinking with this strategy. If they can open their Cash App up to, 16 million users, 8 or 9 million of which are not in North America, I think is a pretty big deal. And a couple of other things.
Yeah, it's interesting to me. It looked the two things that you brought forward, right? These large merchants like CVS and Amazon. I think before this, Square really didn't have any reason to talk to these retailers or these enterprise-sized businesses at all. They're certainly CVS and these other companies are not going to use Square terminals for cash payments, and they might take. I guess if Square had a credit card, I wanted to say they did. They do that, but that would be the only piece. So they get exposure, maybe not serving them as a customer, but really getting to understand these larger businesses and what drives them. And then on the international side, like you said, I think the last number I saw was 94% of their revenue was, I think, U.S. and Canada. So, 6% outside of, and UK, they just got into Ireland, Australia, and a few other countries in Europe, and that's it.
Yeah, so this is going to be really big for their international plans. They kind of outlined their rationale for it, and kind of like their growth slideshow that Brian mentioned. It's not that specific. They mentioned they want to integrate it in both the seller and Cash App ecosystems. They want to allow Square sellers to facilitate buy now, pay later plans. They want to let Afterpay users access their accounts through the Cash App, which that's a smart strategic move, because then it shows them all the other Cash App features that they could use. A couple more things I wanted to mention here. So integrating into the seller ecosystem, so any Square seller can offer buy now, pay later. which kind of helps level the playing field between smaller merchants and large ones that have traditionally been able to offer this stuff. And in Cash App, you'll see you can start your Afterpay installment plan right through the Cash App, which will be much better functionality than right now. Because I got to admit, if I wanted to do buy now, pay later, unless the retailer had a button that said use Afterpay for this, I wouldn't know how to do it. So that really kind of can help Afterpay's growth story continue. And the other thing I wanted to mention before I hand it back to Brian, I think we have to wrap it up in a couple minutes.
Yep.
So the transaction overview, I mentioned it's an all stock transaction. So that 29 billion is based on as of the date this was announced. Afterpay shareholders, which it trades on the Australian Stock Exchange, will get 0.375 shares of Square for every Afterpay share they own. So the valuation can actually change. I think it has changed. I think it's in the 30 billions right now. So that's the Afterpay acquisition in a nutshell. I like the acquisition, not really the price.
Yeah, it looks like if you're a Square shareholder, there's nothing going to happen other than, I guess you get diluted a little bit through this acquisition. Looking at the questions in the queue, I'm going to take Prakash's question first. I would like to put 25% of my portfolio in Square and hold it for 5 years. Do you think this is a risky allocation? So that depends. And we can't give personal advice, but, let me talk a little bit about how, I think of investing in a company. If right now, if 25% of your portfolio and you only have, 5 to 10 stocks, that might not be a big piece. If you're continuing to work and continuing to put money into the market every month, that 25% is going to get diluted over time. I absolutely love your hold for 5 years perspective, and I think Square is going to do well over the next 5 years. So you just really think about your allocation and what you want to do there, and make sure you're diversified.
Do we have time for one more?
Yeah.
Okay, I'll answer the one from Brand New Fool that says, how does Adyen compare to Square and Afterpay? Adyen's based in the Netherlands. They are really a truly omni-channel player. When I think PayPal, I think mostly online. I mentioned I bet they have like a 95% card not present rate. When I think of Square, I think mostly in person. Adyen kind of does both. They have been very successful, more so than Square and PayPal, at larger merchants. I believe Uber's an Adyen client. Microsoft uses Adyen for payment processing. A lot of the big companies in the world do. They were the one who replaced PayPal at eBay. If you remember the big news story a year ago where PayPal dropped eBay as their preferred payment processor. So Adyen specializes in big merchants. They're a truly international company. They operate throughout most of the world. North America is, I think, a quarter of their revenue, which is a big thing. And I mean, it's an interesting market. It's a different kind of focus than it's omni-channel large merchants, whereas PayPal and Square are both more specialized, I would say.
Yeah. Well, excellent. I did want to, Muckend asked me to post my slides, and the slides are really just from Square's investor relations page. So if you Google Square Investor Relations and kind of poke around for the Investor Day presentation, you can see the whole presentation for yourself. So.